Thank you very much for that. Let's address the first stock which is on our radar, Coal India. Nigel, why is that?
Well, Coal India, they've gone ahead and announced a long-awaited wage hike. It's at around 19%, right? And they're saying that it's effective from the middle of 2021. That's the calendar year 2021. This is not unexpected. It's on expected lines that we were working with a wage hike that's right to come about. And even the quantum is not a big surprise, according to me. 15 to around 20%, that's what most analysts were factoring in. So the impact is mostly in line. Now, if you look at it, the analysts, as they were factoring in a wage hike, in high teens. The other part of the puzzle is that there will be lower number of employees. So some part of the employee cost will be taken care of by lower number of employees itself. A very, very rough number. Some on the street expect mid-single digits to high single digits number of employees coming down in percentage terms, 5 to 9% reduction in terms of total number of employees. Coal India, as they were making some provisions on a monthly basis, on a quarterly basis, they were making some kind of provisions for this particular wage hike. What is the way ahead from here on? As of now, it's being viewed as a negative. But one of those overhangs, it goes out of the way. Now all eyes will be on the FSA price increases because the wage hikes have come about. Now, some part of that will be passed through by the FSA price increases. The only problem is we're getting into a pre-election year. So can the government of India, the central government, push through a price increase? That's a big question mark as of now. And as is e-auction prices, they are likely to see some pressure. Remember, they are already gone to elevated levels at highs that we have seen not in the last few quarters or so. So e-auction prices as is have come down a little bit. All eyes on the FSA price hikes and whether or not it can get pushed through. Prakash Diwan is with us. Prakash, I was just explaining to our viewers that long-awaited price increase, wage increase has come about. Now, all eyes on the FSA price increase. Can that come about or not? The stock was at around 250 rupees odd, the recent high. It's at around 217 rupees. What's your view on the stock from here on? The best behind, or still it's a value buy?
Good afternoon, Nigel. So I think given the fact that it's in a sweet spot, even energy requirements, a comeback on conventional energy, the kind of output increase they've done. And remember this wage hike, why, as you rightly, I think, explained, it's not out of turn or unexpected for the simple reason, especially the quantum, because this was linked to a lot of productivity norms that they have managed to attain very well. So this is only going to set the benchmark higher or set the bar higher for Coal India to continue its production at elevated levels. And that's good news, so it has better margins, better revenue visibility. And I think from that perspective, this price erosion that you see or this cut in the price that you see, given the softness in the market, is an opportunity for people who haven't yet participated in this theme to actually add to the portfolio. And this is going to be secularly long-term, Nigel. I mean, I think, you probably start seeing 250 plus zones at some point very easily once a couple of good quarters are behind us. So it's not something which is which needs to kind of be people need to get worried about. The FSA also logically will start crystallizing and is going to be favorable for the company, is my hope. But even if that isn't, the overall business trend is so positive that I don't see any reason why this opportunity should be missed. I mean, I'm not saying you won't get softer levels or lower levels from here on. You could do that because it's a major component of the Nifty and of the market, and it could kind of see some sort of a sell-off. But you always like those opportunities to add to the portfolio rather than when it's on its way up or in a momentum of its own.
All right, Prakash, I'm just looking at a bunch of stocks which are doing well in an otherwise red-looking screen. We have Havells, which has moved to the high point of trade. Havells is doing well. IRB Infra is the other one. IRB Infra actually is up about 10% this week, and that's largely on account of the fact that today there is a board meeting to consider a stock split. But on Havells, what is your thought? Because recently, a brokerage met both the managements of Havells and Polycab and said while the first half of the fourth quarter is likely to be muted because of the star rating changes in fans, etc., the second half is where they believe that demand will normalize and inventory restocking will begin in anticipation of the summer, etc. Your thoughts on Havells and Polycab?
So, good afternoon. Yeah, you're right. Both these companies straddle a pocket which seems very promising. But, I'm seeing a very clear indication of softness in demand for all these products, particularly home improvement or home maintenance or home augmentation kind of products, especially in tier 3 and rural markets. The reason is very simple. These companies actually used to get a bulk of their sales, new incremental sales from there, particularly Havells. And the other portfolio on the unitary cooling products hasn't really done well even now. So their reliance on fans has been more recent. The market leaders like Crompton and all have had a field day, and there are lots of newer brands which have come in, which there are a couple of brands from the south which are invading the market in a significant way. So there is a little bit of competitive intensity that's also worrisome. So I wouldn't read too much into it in anticipation of this restocking, because even if they push volumes and inventories at the dealer level, how much of it actually translates into the P&L is going to be a little bit of a question. So a bit wary on that, to be honest. Polycab has, of course, a far more, a stronger piece in its cables and wires business, which will be absolutely correlated with new construction activity, to be honest. And that's something which you'll probably start seeing pick up in this quarter and all the way to probably May or June before the monsoon hits us. So for them, it's a far better mix of sorts. So out of the two, relatively, Polycab offers a more superior profile of earnings visibility and a bit of robustness, and it's got a strong balance sheet also to back that up. So I would put my money on that out of the two if I had to choose.
To stay on, Prakash, we want to talk about Yes Bank as well. That's in focus after it released its Q3 business update. Abhishek is here to tell us more. Abhishek?
Well, Riba, it's a mixed bag coming in from Yes Bank in terms of operational performance update that they have given. The deposit momentum is very strong, up about 15.9% YOY and 6.8% quarter-on-quarter. The CASA momentum has remained healthy and better than many peers. So it's grown at 14.2% YOY and about 3% sequentially. The decline in CASA ratio on a sequential basis is just 10 basis points to 29.93% when compared to 31.03%. So that's a good point over there. The loan growth, that's dismissal given the fact that it's grown below industry average, both YOY and quarter-on-quarter. So they have lost market share on the loan growth front. Advances are up 11.7% YOY and about 2.1% on a sequential basis. The liquidity coverage ratio, that's improved to about 119.5% when compared to 105% in the previous quarter. Back to you.
Thank you very much for that. Prakash, thoughts on Yes Bank and any other business updates from the financial space which stood out for you? Numbers were coming in from AU Small Finance Bank as well.
Yes, Rima. So, numbers, these bank updates is another additional metric that we have started monitoring apart from cement and auto now. And today was a flurry of those, right? You had IndusInd and HDFC and, of course, Yes Bank. Now, the question with Yes is, all these last 6-9 months, they've actually been in a stage of repair. So from that perspective, you see that incremental change in the liquidity ratio, it's quite positive. That's what they had set out to achieve, and they have achieved that. If their advances haven't grown, it's understandable because their focus was more on, the ARC piece, the new lumpy investments that they are offloading from the book. So all that reset and repair has taken precedence. So I'm not really going to hold them very majorly responsible for any slippage or miss in the advanced growth. What's next for them? After the change that's happened on the balance sheet, are they able to go back to that credit growth cycle, which a lot of the other private sector banks are clocking? Is going to be the key question. So I would monitor that very quickly. Apart from the last quarter being a recovery season of sorts for some of these assets, which are very clearly looking like ripe enough to be restructured. So it's in a positive space. The only question is the stocks run up from that 14, 15, 16 zone to 20 plus, 21 plus in a little bit of a hurry. So it might consolidate, but once it does, you'll probably start taking it, in the same league as an IDFC First or maybe some of the other smaller private sector banks that are looking up. But PSU banks, don't lose sight of that. I think there's much more happening beneath the surface there. I'm not too sure which bank will actually head out to the finishing post earlier than the others, but some of the smaller ones like UCO and all have started smartening up quite a bit from what I hear from clients itself who are out to borrow, who have loan proposals getting done from some of these PSU banks, and the mood is very different out there as well towards growth. So, but the PSU ETFs are probably one of the best ways to play that, and there could be one big significant jump in the valuations for most of these PSU banks as well. And it's best to play along with an ETF rather than individual stocks at this point.
Oh, all right, Prakash. Well, by the way, the markets again are seeing some selling pressure. The metal index has moved to the low point of the day. Maruti has come off the high point of the day. So it's looking a little bit skittish. But from the broader markets, a couple of stocks are doing pretty well. Zen Technologies, that's one of the notable gainers. Big volume spike is what we have seen just in the last 30 minutes. That moves to the high point of the day. Cupid as well has moved higher. And TVS Electric, that's another stock that's locked in upper circuit with a gain of close to around 20%. So a few of these stocks moving well, but otherwise the markets are looking a little bit skittish. We're almost at the low point of the day, holding on to the day's low. Very, very important. 18,030, 18,040, just around 10 to around 20 points away from those levels. Slip into a short break, you come back. We'll continue our chat with Prakash Diwan. Ravi Dharamshi, a Value Quest investment advisors, will also be joining in to give us his take on the markets for 2023. Don't go anywhere.